Hello everyone, Jamie Trill here, your favorite CPA and financial literacy coach. And today is a day that has been coming for a while. It is time for me to finally say it. I told you so. And if you have no idea what I'm talking about, this relates to the Employee Retention Tax Credit that I have been talking about for a couple of years. This was a tax credit that was put in place during COVID to essentially give people money back for any employees that they retained during the pandemic. And you had to meet very specific criteria in order to be able to apply this to your situation and get the credit back. But this credit was actually a very big credit for a lot of people. For a lot of people, this was even bigger than PPP loans. And it was kind of unknown towards the beginning, but then as soon as people realized, how big these credits could be, all of a sudden we started seeing all different kinds of companies jumping in to kind of get their piece, right? I've even seen videos of certain companies calling this a cash grab. So what they wanted was to get in on the billions of dollars that the US government seemed to be giving out. And there were a lot of bad actors. When there are billions of dollars at play, you can guess that a lot of people come out of hiding, come out of the woodwork to get their piece of the pie. And that's exactly what happened. Now, the IRS has been warning about these ERC mills for quite some time. And in general, what is an ERC mill? Well, the way the IRS looks at it is if people are heavily promoting the ERC to you, if you're getting all kinds of robocalls, right? A lot of these ERC companies are charging percentage fees based on the amount of the credit. And these are large percentage fees sometimes. I'm talking 15, 20, 25% of the pre-tax credit, right? So not small amounts of money, especially if you're getting 6-figure, 7-figure credits, which are not abnormal. So ultimately what the IRS was seeing is that in a lot of cases, especially with these aggressive promoters who are charging high percentage fees, they were telling people that they qualified when they really didn't, or maybe telling them that they qualified for more time periods than they really did, or inflating the credit in some way because it meant that they were getting more money too. And importantly, the IRS was not actually auditing these as these claims were coming in. That's not typically how it works with a tax credit. Usually what's going to happen is you're going to file an amended payroll report for a payroll tax credit. They're going to process it, give you back that money, and then later on in time, they're going to come back and audit you on it if they especially don't think that you qualified for it, right? So a lot of people are getting this money. They're paying out these companies who are saying no risk because, we're not going to charge you until you get the money, right? But then what's going to happen when the IRS comes and tries to follow back up on some of these companies that are long gone? What's happening is the small business owners are really the ones that are at most risk here. And that's what I've been warning this entire time. Stay away from these companies. Make sure you understand the rules of ERC yourself so that you can determine whether you actually qualify. And don't just think, they've processed tons of these. I'm sure they know what they're doing. Make sure you are protected. So what's the new news for 2024? Well, we heard a little while ago that they were going to be essentially allowing people to withdraw their credit. So if you have not received your credit, you are able to actually withdraw that, and you're not going to have any fines, any penalties, anything like that if you don't think that you actually qualify for it. Okay, so there are ways to do that on the IRS website. I will go ahead and post that down below in the show notes so that you can go check out how to do it. You can see here, right? It specifically says on the IRS website is that the IRS created the withdrawal option to help small business owners and others who were pressured or misled by ERC marketers or promoters into filing ineligible claims. Right? Claims that are withdrawn will be treated as if they were never filed. So no harm, no foul. The IRS will not impose penalties or interest. So if you're like, you know what? I don't think I really qualified for this. I'm just going to pull this whole thing and be done with it, right? I don't want to get into the crosshairs of whatever this audit situation is going to be. Then this exists for you. But what if you're a person who already filed for it, already got your money, and now you're worried that maybe you didn't qualify or you're not sure if you actually qualified? Well, that is where this new program called the Employee Retention Credit Voluntary Disclosure Program comes into play. So the IRS has rolled this out. It is only around as of right now through March 22nd. So if you wanted to take advantage of this, you would have to do it by the 22nd of March. But ultimately, it allows you to voluntarily pay back your ERC and only pay back 80% of it. Now, in my opinion, the reason they're saying that is because a lot of these promoters charge 20%. The government knows it's going to be difficult for you to get your money back from those promoters. And so they're going to say, you know what? Let's settle it. You give us back 80% of the money and we'll call it a day. No penalties, nothing. We're not going to come after you. You keep the 20%. And oh, by the way, the 20% isn't taxable. You don't have to go back and reduce your payroll wages by that amount, which means ultimately it's a non-taxable amount, which wasn't the case for your original ERC credit. So that's kind of the good side of this, is they're saying, you know what, you can give it back. For a lot of people, though, I know that money is probably long gone. If you got this ERC credit a year or more ago, it's going to be pretty dang hard in a lot of ways to get that money back to give to them. But this is an option for you to do if you really think you didn't qualify. Now, on the plus side, if you don't have that full 80%, they do have an ability to come up with an installment agreement with the IRS. So that might be an option if you don't have all of that cash to be able to pay it back by March 22nd. Now, if you want to take advantage of this voluntary disclosure program before the deadline runs out, you're going to file this form, which is form 15434, which I will also post down below so that you can get to it. And this is where you're going to put in all your information about the credit and tell the IRS that you want to give back the 80%. And you're going to put in your information and the information about how much money you got. But my favorite part of this, I got to tell you, because karma, right? Like as my as my dear friend in my dreams, Taylor Swift says, right? Karma is going to come back for you. What this is asking for here is the preparers and advisors that helped you. So if you are saying, you know what, I don't think that I actually qualified for this, I'm going to go ahead and file this form, give back 80% of the money, keep my 20%, and just go on my merry way. Well, they're going to say, sure, you can do that. But now you got to tell us who helped you, right? Who was it that advised you? Who was it that filed your claim for you? Who was it that told you you qualified when maybe you didn't? And you're going to put that person's info or that company's info in here. Now, why do you think they're doing this? It's very clearly to me because what they're trying to do is really get at who are the bad actors here. Now, they already know. They already know which companies have been aggressively promoting. They already know which ones are more likely to be telling people that they qualify when they don't, or telling them they qualify for six quarters when maybe they qualified for half a quarter. They already have that on their radar screen. But this is another way for them to collect this information to see who were the bad guys, because they're going to go after them. That is who they really want to get. Now, if you filed a claim and you knowingly knew it was fraudulent, right, and you committed fraud knowingly, then this isn't going to protect you. Right? They're still going to potentially come after you, all of those things. But if you just trusted somebody, right? If you just said, well, I just figured that they knew what they were doing, right? If you just had trust that these companies were legit and the rules were being interpreted properly, then you should be fine by doing this. And they want to go after the people who were the real problem here. And herein lies where my I told you so comes from, because I have been yelling and screaming about these ERC mills forever. If you've been watching my channel, you probably didn't use one of them because I've been warning about this for a long period of time. But there's a lot of people out there that, really just got taken in by this. And it's extremely frustrating. And it's hard to even know, right? One of the questions I'm getting from a lot of people is, how do I know if it was legit? I don't know. I'm not sure. So if you're trying to figure out if you should give back your credit, was your credit legit? I'm not sure if I should trust this company that did it, right? First of all, go back to the documentation you were given. See what you were given. If you weren't given a detailed calculation, if you weren't given anything that opined on why you qualified for the credit, then that is a red flag. If they just said, here's your credit, we're good to go, and they didn't ask you a lot of questions and there's no really good documentation that you were given, that is definitely a sign that there might be an issue. Now, especially if you qualified for a reason other than a drop in gross receipts. The drop in gross receipts is a lot more easy to prove out, right? The drop in gross receipts is really something that is, just a math equation. So most of the time when people are qualifying when they shouldn't, it's because they're using the second way to qualify, which is related to a partial or full shutdown, right? And what's happening here is they're getting a little loosey-goosey with the way that that's interpreted, even though the IRS is not at all loosey-goosey about what it means. A lot of people are saying, well, if you had supply chain disruption, that's my favorite one, right? Like, oh, my supply chain was disrupted. Well, it has to have greater than a nominal effect on your business. So if you could have gone out and gotten another supplier really easily, or if it was only a little bit delayed in supply chain, but it wasn't having a major impact on your business, that's not gonna fly. And it has to have been because of a government order, all right? So this is the other thing. Somebody has to be under a government order, whether it's you or a key supplier that had a more than nominal impact on your business. There has to be a government order, and there has to be a start and an end time to that government order. If there was a government order for a month or two, right? That doesn't mean that for 6 entire quarters, you're going to qualify for the ERC. And that's one of those red flags that I've seen is if you're qualifying for quarters when you're like, actually, we were doing great and our revenue was up. Can you qualify for ERC with your revenue going up? Yeah, you can. But to me, that would say it's likely that whatever, orders existed, whatever disruption was out there, didn't have a more than nominal impact on your business. Those are the places where they're getting a little loosey-goosey with the rules. They are interpreting it in a way that the IRS never intended it for it to be interpreted, and that Congress that passed it never intended for it to be interpreted. So sometimes it's kind of one of those, like, if it seems too good to be true, it might actually be in this case. So those are things to really ask yourself. And if you felt that there was anything shady, like maybe the company didn't want to sign as preparer for some reason on your 941Xs, I wonder why, right? If there are things like that that just felt off, just kind of check in with yourself, right? Sometimes we know when something just seems strange or it seems just, a little bit out there. We don't really trust what's happening. Trust your gut on that. And then go check and see if the company that you used is even still in existence, because a lot of them have shut down since the end of September when they put a moratorium on processing of ERC claims. Now, one more thing that I want to talk about related to ERC that is new news, new updates for 2024 that literally just happened and are in the process of happening is right now there is a bill making its way through Congress that has an impact on ERC, and you should know about it. The bill is the Tax Relief for American Families and Workers Act. It is currently passed the House. It will be going to the Senate next, and if enacted, has a lot of different provisions that could impact. So if you've heard about changes with the child tax credit, they may be expanding that. That's part of this bill, but also changes with ERC. And that's not being talked about as much in the media, but it is really important. And one of those changes is that they are moving up the deadline, okay? So within this, you're going to see that what they've put in is a deadline for the ERC. Now, typically, you would have had until April 15th of 2024 to file for 2020 and April 15th of 2025 to file for 2021, okay? However, that is ending sooner rather than later if this bill is passed. So they've put in here actually that there's a limitation on credit and refund of COVID-related employee retention tax credits. And what this is basically saying is no credit or refund of any COVID-related employee retention tax credit shall be allowed or made after January 31st, 2024, unless a claim for such credit or refund is filed by the taxpayer on or before such date. Well, it is after that date already when I'm recording this, and this bill hasn't passed. So what happens now, right? And I don't know, but if this bill is passed in the current form, that means if you're filing right now for your credit, you're not going to get it anyway, right? So definitely make sure you're not paying any companies to file this for you right now, because chances are, if they don't change the wording in this bill, it would be retroactive back to then, and you would not get your credit. Could they change that date? Maybe. Will they? Probably not. That's my personal opinion. So the ship has probably sailed for you to be able to get your ERC, and the companies that are still out there promoting this and not telling you about it might be a little shady. And speaking of shady, Another fun thing in this bill relates back to our good old friends, these ERC mills, or as they're called here, ERTC promoters, okay? So in here, there's a lot of information about who these promoters are, what fines that they could potentially have, right, for not doing due diligence or claiming, refunds that they should not have claimed. So they are going after these guys full force. There's a lot of information in this bill about how they're going to go into it. And you can see here that one of the potential penalties is $200,000. And that could be on a per time basis. So per violation basis, right, of $200,000. So that is not small. So if they are routinely telling people that they qualify, that could actually add up quite a bit. There are probably a lot of people shaking in their boots right now, and I am here for it, y'all. I am here for it. Now, as an aside, if you think it's a little strange that I am reveling in the downfall of these ERC companies, well, I'll tell you why. It's a little bit of a personal fight for me. Number one, because I have been warning about these companies for a long time. I am a really big fan of fighting for the little guy. And when there are these people coming in and taking advantage of them, I cannot handle it. Like the justice-oriented nature of me just kicks in. And I will tell you, I was approached by innumerable ERC companies to partner with me because they wanted me to refer business to them. And it was like these MLM type scheme, percentage of this. And then if you recruit these people, you get this percentage and you can get $40,000 per deal and all of this, right? Like insanity. And I was just like, no, just no. And that's because I knew what was happening and it didn't feel good. It felt like taking advantage of small business owners. The purpose of this credit was to help small business owners who truly suffered from COVID-19, okay? That was the purpose. The purpose was not to pad the pockets of a bunch of opportunistic, okay, people out there who just wanted to jump in on a cash grab. And so I get very fired up about this also because it got real personal when they actually took my copyrighted intellectual property, some of these ERC mills, and started using them to service their clients and do their calculations. That is the spreadsheet that I created with my own time, made for small business owners and charged $27 for. They are then turning around and using, and I have proof, okay, they're using to calculate these credits and then charge hundreds of thousands of dollars to those small businesses. Not okay. Not okay. I'm not the person you want to mess with in this. I'm just going to tell you, if any of you are watching this right now and you're like, maybe she's going to go away and leave us alone. No, I'm not. All right. You know who you are and I will name you if I need to. But this is personal for me. And so I am so glad. I hope you guys get slammed with all the fines you possibly can because you deserve it. Karma comes back around. Okay. I need to calm down and take a sip of some water. Got a little fired up there. One thing that I will say too, with reading this bill, my read of this bill is that this could also potentially mean that there will be fines for those people who maybe weren't even the ERC mills, but these ERC mills then partnered with all these affiliates, thousands of affiliates some of them had, that were their army going out there and making robocalls and doing all of these things in order to refer business to these companies. I believe that this bill also can target those people, especially if those people were giving any kind of advice, any kind of feedback towards, telling you that you qualify for this, those types of things. Those people are also at risk. So even if you weren't doing the actual calculation and you were just out there promoting, I think it's interesting that they are going after ERTC promoters, not just ERTC mills, right? But the promoters as well. If you're somebody that was like, you know what, I got in on a side hustle and I made hundreds of thousands of dollars, this could impact you as well. This bill also extends the amount of time that they have to audit these things. They're extending it to 6 years. Y'all are not going to be able to sleep at night for a little while. And by y'all, I mean the people who were doing this willfully, not my small business owners that got pulled into this. The IRS definitely will work with you. But my friends over here, you're in a little bit of trouble. I'm not crying myself to sleep over it. I'll be honest. All right, y'all, rant over for today. I'll be back if there is more news on this front. In the meantime, make sure to comment down below. Let me know what you thought of the video. Let me know who you used for your ERC and what your experience was. I'm really trying to gather as much information as I can about some of these, especially the big ERC companies out there. And definitely make sure to like and subscribe, and I'll see you next time. Bye for now.